Hey everybody, welcome back to MacTax. We have a very special guest today, Mr. Dan Hannum. Very happy to have you here, the COO of ZenLedger. Dan, thank you so much for joining us.
Thanks for having us.
So before we get started, I'd love to just get a little bit of background about yourself. I can give you further details about myself and what I do, but just to give everyone here who doesn't know you the background, yeah, take it away.
Sure. So my background's largely in traditional finance. I got my MBA from the University of South Carolina, and then spent some time in New York working for Goldman Sachs, Morgan Stanley, and then most recently TD Ameritrade. Made the jump full-time professionally into crypto in 2015 at a firm called Blockchain Capital. It was one of the earliest venture capital funds focused on crypto and blockchain technology. Was there for about a year and a half before leaving and started my own fund. Raised a $25 million venture fund in 2016 and a $75 million venture fund in 2017, and began investing into early stage crypto companies. Our focus was largely on infrastructure plays. So what kind of be the picks and the shovels of this new asset class. And crypto tax was kind of one of those staples where we believed as the asset class continued to mature, that everyday individuals, enterprises, and then government entities would need to be able to understand and easily comply with existing tax regulations. So ZenLedger was one of our first portfolio companies, and then in 2019, I jumped on board full-time as the COO.
That's awesome. That's quite the journey. It's very an impressive resume there. So just a little bit about me. I know we talked briefly, not as depth of a career just yet. I graduated at Delphi and worked at PwC out of college, doing business tax returns and accounting, and started doing some work on the side when COVID hit. Eventually built that up enough to start up my own company, MacTax, and been helping businesses, individuals with their tax, accounting, compliance, consulting since full-time now since July 2021, and bought in to VFriends early on, which we had talked briefly about. You're a holder as well. Mm-hmm. And really started to get into this space a lot more and kind of learned how complicated this area is of crypto and NFT is. And I was so happy when you reached out to me because there's so much overlap here and I'm getting so many questions. So before I ask you more specifically about ZenLedger, tell me a little bit more about how you went from college to then ZenLedger. I know you were at Goldman Sachs, finance background. What made you get into this kind of crypto and especially the crypto tax area from where you were? What interests you? What kind of sparked that along the way?
Sure. I think I've always had kind of like a fascination with numbers, and numbers have typically kind of come easy to me. And so when I was in school, I double majored in international business and accounting, and then triple minored in econ, finance, and Spanish. And the Spanish comes in because of the international business program at the University of South Carolina requires you to minor in a language because they kind of set you up for, understanding international business. And
right.
So that.
And did I hear you majored in accounting?
So I double majored in international business and accounting, and so had most of my junior, senior, and then into MBA program was focused around like finance, accounting, econ, international business, and it was a great kind of entryway into the world of finance. And at that time, kind of went a similar trajectory as a lot of students who wanted to work in finance and wanted to work for like big banks and wanted to work in Wall Street, and that's kind of where my trajectory went. I got my first internship my junior year of school, and was working at Goldman, going through my Series 7, Series 63, and a lot of my certifications. And then was fortunate enough to be offered a position when I finished school. And so that was kind of the early trajectory into finance in that career. Crypto really started in 2012, 2013, more from an individual perspective. So I had some friends that were investing into Bitcoin, and wanted to just learn more about it. So put some money into it and wanted to understand the ins and outs and what the future use cases would be. And that was probably personally in 2012, and then professionally in about 2015 was fortunate enough to meet kind of be at the right place at the right time with an individual named Brock Pierce, who was leading blockchain capital, and they were looking for analysts to come in and kind of help solidify the fund and kind of institutionalize the fund and really have a dedicated team focused on early stage crypto equity positions. And that's kind of my foray from professionally from finance into crypto full time.
Wow, that's awesome. And then, so going to ZenLedger, how far was ZenLedger along, and when did you make the jump?
Yeah, about probably 3.5, 4 years after going into crypto full time. So my first year and a half of working in crypto full time was for Blockchain Capital on the early stage equity team. And so my day-to-day looked, meeting with 20 to 30 different entrepreneurs who were either had thoughts of or were in the process of raising capital to scale their ideas, whether it was software, protocols, or services. And so that was my original day-to-day. In late 2016, I was an advisor to an ICO project called Gear, which is a green energy and renewables token. And some of the advisory board were members like Larry King, Stan Barty, who runs a company called Forbes Manhattan, which is a multi-billion-dollar merchant bank based in Canada. Jim Rogers, who's led one of the most successful funds on Wall Street, and was fortunate enough to kind of be, part of this advisory board for this ICO. And through that process was able to get Stan and the team involved in crypto and in this project, and they all put in maybe $1 million, $2 million, and in a span of 8 to 10 weeks walked away with 3, 5, 7, 10 million. So they were pretty happy about that and wanted to get a better allocation into crypto. And in late 2016, early 2017, there was a lot of buzz and energy around crypto. We saw prices start to skyrocket, and it was kind of one of the first initial waves of a lot of people getting in. And so anyways, left Blockchain Capital and put in about $1.5 million of my own capital, and raised about $23.5 million from the 3 other individuals, and started Hannum Capital Management, which was essentially the same focus. We were just going to invest in early stage crypto companies. And that's how I got introduced to ZenLedger and the team. So we actually invested in the company before I jumped into a full-time position.
Nice. Very cool. And then when you jumped into ZenLedger, was that capital infusion really what sparked them, or were was it just pouring gasoline on a fire that they already had going? And then also your role jumping in, how has the company kind of grown and navigated? Because I have in my Discord, I have people asking me about all these different platforms, and some of them seems like they're kind of struggling to keep up with how complex it is, all of the emergent technology, the user input, trying to make it seamless.
Sure. Yeah. So I would say it was kind of a combination of both. I mean, when we invested in the company, when we look at an investment, it has to meet certain criteria for us to feel comfortable investing in the project. And so Pat, my partner and CEO, had an extensive background, Chicago Booth MBA, was a Navy helicopter pilot, and was running multiple business lines at Amazon. Our CTO, Brian Starbuck, had sold 3 of his last 4 companies, including Assurance, which is a $3.4 billion exit. You're talking about people that have been there, done that, scaled, massive organizations, and then had very successful exits. And so that's obviously good from a team perspective, and the core product was something that I needed myself. And so when I first got started in crypto in 2012, all the way through 2015, 2016, I was fortunate enough to have some assets outside of crypto and wanted to make sure that my crypto was not going to impact those assets. And so compliance and accounting was very important to me. And when you looked at the market in 2016, there was kind of 2 really small companies in the market. They were kind of souped up Excel docs, but not really companies, right? They weren't really great software programs. They didn't have good UI, good UX, good customer support, good pricing. And so we saw the opportunity to kind of build and scale an organization that would be focused on the crypto tax market. And so yeah, I think it was a combination of both. It was they were the right team at the right time and the right opportunity, and then our capital allow them to start to make the right hires to fulfill that opportunity. And then when I joined the team in 2019, it was kind of a continuation of that. I was fortunate enough to be in a perspective where I was meeting with some of the smartest people in crypto and investing into their companies. but that was kind of it, right? I'd meet with them, once a month or once a quarter, or be on the board and kind of help guide them. But that was it. It was just, bring money in, allocate that money to great companies, and a little bit of in between, right? But there wasn't anything that was really building. And so I was looking for the right opportunity to kind of build something. And because of the investment into the company, was very familiar with the trajectory, the growth, and the potential for the company. And so when I jumped on as a COO, it kind of looked at all aspects of our company, from product to marketing to biz dev to customer service to engineering to security to integrations. And so I kind of sit on across the company in multiple different perspectives and make sure that we're all heading in the right direction.
Yeah, that's awesome. It's incredible. And it really is fulfilling such a need, because nobody cares or thinks about it. You make $500 here, $100 here, and all of a sudden now, with the market cap of NFTs and crypto really reaching huge milestones, I think I saw 3 trillion. People are making real money, and I'm sure a lot of people now today in 2022 are having those early concerns that you had back in 2016. Is how do I make this part of my income stream and asset class and do it the right way? I find everyone wants to do it the right way, and there really seems to be a lack of guidance, help, technology, and regulation to in this space to help guide people.
Yeah, no, I think
one thing go ahead.
No, I was about to say, I definitely agree with that. I think the vast majority, we see kind of different waves of crypto users, right? And so the first users in like 10, 11, 12, maybe were more of like crypto anarchists. They're like against the government. I'm not paying taxes. I'm not doing whatever. But I think that, from 2017 through today, the net new user wants to be able to use these products, whether it's DeFi, whether it's NFTs, earn income or earn capital, earn capital gains. But they want to be able to do that seamlessly. They want to be able to do that accurately. And they also don't want to spend a lot of time on taxes, right? No one really does. They want to be able to put their money wherever they want, and then know at the end of the year, throughout the year, that they can manage their portfolio effectively. And so what we try to do at ZenLedger is really provide a lot of guidance, a lot of education, a lot of resources, a lot of content on here's how crypto works, here's how taxes work, here's how the software works, here's what you need to be aware of, and then try to put tons of investment into the actual product itself to simplify that, not only for consumers but tax professionals or enterprises who are trying to adopt to this new technology.
Right. Yeah, absolutely. And it seems like now, as the space evolves, there's so much utility for a small business to start their own NFT collection, to use crypto. Whereas, like you mentioned, it was going to be the new currency, until people realize, wait, it's the underlying technology of all this that's getting built, and it's kind of this whole new ecosystem. I wanted to ask you your thoughts on Biden's executive order. It doesn't seem like there's much there, but it seems like it's getting the ball rolling. And I remember a couple of years ago, they were talking about banning crypto altogether. And I had it on my phone here. There was a lot of talk about what we discussed, protecting consumers, providing guidance with compliance, as well as fostering the growth and promoting U.S. leadership in technology and economic competitiveness. So there seems to be a big shift, at least from what I've seen over the years, as to what the possible response was going to be from regulators. It seems like we've come a long way from the thought of a full-out banning of it. Now we just gotta, kind of place the guardrails on it and figure out what it is, how it's going to be taxed, and then I truly feel like the industry will really explode. I remember watching videos of Kevin O'Leary talk about it, that there's so much money on the sidelines waiting for some clarity. I know you're in this space, working with the IRS. Maybe what just your thoughts on this recent development?
Yeah, as you mentioned, we have, in addition to our underlying software, we work directly with the IRS on their criminal and civil investigation units on helping them understand and being able to collect crypto tax revenue. And so we've been working with them for a few years now. And so the government has been, increasingly more aware of crypto, its impact, and how to view it. And I think, like most things with the government, there's some good and some bad to it, right? And so the good is hopefully new guidance and updated guidance. especially in crypto tax, we haven't had very clear guidance on some of the more the newer forms of technology in the ecosystem. And so there's not like IRS Section 2, Paragraph 3 that says if you're using this DeFi protocol and you're doing X, Y, and Z, here's how it's treated. And so we have to apply this older guidance and more conservative guidance to some of these gray area topics to say, hey, you can treat it this way more conservatively or more aggressively. And so I think, one thing that we're excited about is we've done a few stories around this is that, we think that it signifies the growth of the asset class, not only domestically in the US, but internationally. We're seeing more international governments become aware. We're starting to see better guidance and better, purviews around the ecosystem. And I think for most of us in in crypto, whether you're a buyer, a seller, an investor, an operator, whatever you choose to do within crypto, I think the vast majority want kind of those guardrails or guidelines. And then just like anything in life, right? People are going to stay in between and people are going to go over the lines. And nothing's going to change about that, right? It's just the people that want to stay in them can't easily stay in them because we don't know where the guidelines, are. And so I think for the vast majority of participants, we would love to have updated guidance, not only on crypto taxes, but in crypto in general. One thing that we have in crypto that we use is something called the Howey test to identify if something is a security or not. And that Howey test was actually formulated in the 1940s. So we're using a ruling from 80 years ago, before there was internet, to manage digital assets, right? And so it just goes to show that we're using these really, really old, viewpoints and guardrails and references to apply to a brand new asset class. And that's probably not the best way to treat this asset class. We need new rules. We need new guidance. We need new understandings of how these things work. And so long story short, I think it's most likely going to be a net positive for the industry. And then we'll see what happens on like the CBDC side, which is more of like a central bank digital currency, and something that China and other nations are pursuing. And the US will likely try to pursue some type of dollar stablecoin, owned and ran by the Fed and not by Circle or other companies that operate stablecoins today. So we think net positive, and it wasn't as I think scary as it could have been. We've seen some pretty uninformed things come out of the government revolving crypto, and this is probably one of the most informed, or at least one that says we like to get more informed. And that's what we're excited about.
Yeah, I agree. I think it's definitely heading in the right direction. I remember seeing the congressional hearings that they're talking about how they were talking about how can they keep the dollar relevant and such a stable currency for the world. And they talked about we can't just write off being a successful economy from post World War II anymore. The dollar has to have some utility, and it's fascinating when you listen to how the government is going to even get involved in providing utility within this space. It's going to be really really interesting to see how that plays out over time. And personally, I think it's great that the U.S. is embracing it. A little late to the game with some guidance and regulation, but I think it's a net positive that, just like the early days of the internet, they didn't try and squash it or something crazy like that. So I think, like you said, net positive, moving in the right direction. It's always slow. There's always going to pull left, pull right. I feel like the early days of the SEC might have been like this when people first started trading stocks. So things are going to have to play out, and there's going to be a lot of evolvement in this space. One thing that you started to touch on that I really wanted to get your opinion on, and your really guidance that you guys are putting out, is we're using these old rules and these old regulations pre-internet to tax and assess how certain transactions and certain property are treated. Specifically around NFTs, it seems to be a very big gray zone. A lot of tax professionals are advising that they're collectibles, and it seems like this is more likely than not the general consensus for now. It's always changing, that NFTs seem to be a collectible art taxed at 28% long-term capital gain. But I'm wondering, is your firm looking at more of the functionality of it? Because now we're starting to see a lot more NFTs, such as VFriends, where it provides you access to an event, like a fly fish where you get access to a restaurant. You know, an NFT, let's say if it's got a DeFi component where you're earning interest. You know, how are you guys looking at this space, and how are you advising people whether they buy it for personal use? Is it the intent of the user? Is it more of the utility? And then also, how are you dealing with the fact that, you know, Gary Vee could come out and say, I'm putting 1% of my company into VFriends, and now you're all stockholders. Now that changes it from possibly a business expense ticket at VCon or a collectible and now it's ownership in the company. So there's so many components that people can put in these NFTs. Curious to see how you guys are navigating that, putting out guidance in regards to all that.
Yeah, so what we try to do here at ZenLedger is really follow existing guidance. And that's something that we talked about earlier, that there's not really great guidance around in these newer aspects in crypto. And so the gray area that we have where people are taking different interpretations is because there's not an exact interpretation. And so we talked about earlier, there's no, you know, if you buy a VFriends token or NFT, you know, section 2, paragraph 3 says this, right? There's nothing there. And so that's why you have different tax professionals or different tax attorneys that will take different takes. And some are, you know, there's an argument to be made on either side, right? And that's really where you have the spectrum of conservative and aggressive. And we try to, you know, generally head towards more conservative than we do aggressive for our clients. And so with NFTs, there's obviously an argument you can make that they are art. There's an argument you can make that they are collectibles. There's an argument that you can make that if you are buying and selling NFTs, that you are an art broker and not an investor. And so there's all these like arguments you can make, right? But they come because we don't have direct guidance on there. And so what we hope, and so we try to shy away from saying what should or should not happen. That's not our position at ZenLedger. We like to allow the government entities to say what's going on, and then we want to follow that guidance and follow those rulings. And so, you know, we talked about old laws and old regulations, but you look at our current political situation and who's in our political class, right? You know, the people making these old laws and old regulations are old. You know, generally, you know, senators are 50, 70, 80, and they're the ones trying to dictate how crypto is going to work. Have they ever opened a wallet? Have they ever bought an NFT? Have they ever bought Bitcoin and you know, swapped for ETH, right? Probably not. And so it's interesting to see how that guidance will come. And our hope and our goal at ZenLedger is to be, you know, at the table with these regulators and with these, you know, with these individuals, and hopefully guide them on, hey, here's how things actually work. Here's how people are actually using them. And here's common sense guidance that gives parameters, that gives guidance, that gives overview and gives guardrails to the people using this technology. And so, you know, we always try to shy more on like the conservative side. And, you know, from our understanding right now, there is no real distinction between a fungible and a non-fungible token. And so what I mean by that is NFT would stand for non-fungible token, basically more of like a unique token, versus a fungible token that can basically interoperable. And so the IRS basically has guidance more on the fungible side, not on the non-fungible, but a conservative approach would be to take that guidance for fungible assets and apply them to non-fungible. So our guidelines would likely be that if you are, you know, using ETH to buy an NFT, you are essentially disposing of your ETH or one piece of property to acquire a new piece of property, which would be your non-fungible token. And so that would incur a trade or capital gain or loss, depending on when you bought the ETH, how long you held it, the cost basis and things like that. And then when you go from that NFT to another NFT or NFT back into ETH, another taxable event that has its own parameters that need to be tracked. And so from our perspective, the non-fungible tokens are going to be treated just the same as fungible tokens. And those general classifications would be, you know, you can buy an NFT or crypto with dollars as much as you want with no taxable impact. Anytime you go from one crypto to another, Bitcoin to ETH or NFT to NFT, likely going to have a taxable event. And then anytime you go from crypto, whether it's, you know, fungible like Bitcoin or non-fungible like an NFT back into dollars, taxable event. And so we generally would view non-fungible assets the same as fungible assets until we get updated guidance that says this is how it should be treated or should not be treated.
Right. And that's something I've made it a point to try and explain to people is it's kind of 4 steps, four taxable events. You buy ETH, you got to record your basis. You sell ETH to buy an NFT, you got to convert the ETH back to USD. You got a gain loss on your ETH. Now you have new basis in your NFT based on what you traded 1 ETH, now that's $2,000, let's say, that's your basis in the NFT. Sell it for 1.5 ETH, now you have $3,000, you have a taxable gain of 1,000. Until ETH goes back down, then you have another loss when you convert the ETH back. A lot of record keeping, something that it seems like ZenLedger really and can really come in handy for. Before I want to get into the specifics of how your technology works and how people can either leverage it themselves, or if they want to have a tax professional leverage it for them. But when you were talking about, guidance and everything, I'm pretty much been advising and agree basically with everything that you were saying. And the one small area that I wanted to just ask you on is, you mentioned everything is, fungible. What about, and I agree in the sense that like these are all taxable events. In the event that you hold an NFT for a year and then it's sold, is in your opinion, based on current guidance, do you think it's conservative to take the 28% collectible long-term gain on it? Or is it more of a 20% regular capital gains?
We would
because obviously the collectible is a higher rate, so it ends up hurting you, but it can also be a benefit if you sell it at a short term, like say 364 days, and you have a lower ordinary income tax rate. You could do some strategy there if your regular rate is at 22%, and you can make some, save some tax on the delta between that and the 28% collectible rate.
Yeah, under the current guidance, what we would advise clients is that if you hold it for over a year and go into the long-term capital gains, that would be taxed as just an ordinary asset and not as a collectible, and be subject to either the 0, 15, or 20%, and not as an actual collectible. Like we said earlier, you can definitely make the argument, and some tax professionals and tax attorneys have. But that's
right.
the gray area, right, where there's no specific guidance. And so if you make the argument that it's a collectible and it's not, then you may need to have to refile, amend, be subject to penalties, late fees, interest, etc. And if you take the stance that it's not a collectible, which we would kind of generally go to, you may pay a lower percentage on the capital gain, but are likely going to be more clear from a audit or investigation perspective. And so we would generally, in that example that you said, we would generally reference that as a long-term capital gain on the NFT. As you mentioned, some of the factors that go into play: when did you buy it? How much did you buy it for? The big thing that people sometimes get mistaken about is sometimes using ETH as a basis versus dollars. And so the big key to be mindful of is using dollars as your basis. And what I mean by that is, in your example, if you buy something for 1 ETH and sell it for 2 ETH, naturally you'd be like, okay, I bought it for 1, I sold it for 2, I have a gain. But the dollar value is what matters. And so if I buy it for 1 ETH and ETH is at $1,000, that's a $1,000 basis. If I sell it for 2 ETH and ETH is at $400, that'd be an $800 basis, right? And so you'd have a $200 loss on that example, even though you went from 1 ETH into 2 ETH. And so the big thing is to be mindful of the IRS only cares about dollars and not ETH. So you can buy something for 1 ETH and sell it for 2 ETH and have a gain. You can buy it for 10 ETH and sell it for 8 ETH and have a gain on that as well, even though you're losing in ETH terms. And so just something to be mindful of, because that's something that I think we get a big misconception on is, I bought it for 1 ETH, I sold it for 2 ETH, I must have a gain. Or I bought it for 10, I sold it for 8, I must have a loss. And so the dollar value can impact that depending on your cost basis and your holding period.
100%. That's my biggest point to people in this is you can argue 20%, 28%, and that's really minutia compared to converting everything to USD. I mean, that is, you can't even begin to calculate if you have any taxable gains or losses if you haven't spent the time or used the software to convert everything back to USD, because you don't know what your basis is. You just have a bunch of proceeds and no idea what your cost basis is. And usually most people are going to end up overpaying in that situation, I find, because they're just going to go with the conservative route and probably get crushed because they're not offsetting with any basis, or they don't want to take the time to go through Etherscan and find everything.
Yeah.
Talk to me about ZenLedger. Is it, I open an account, I link my wallet. Is it like a QuickBooks? Give me a little preview of the user interface. And is this something where, you find that most of your clients are doing it themselves, or are they having their tax professional do it? Are they having their bookkeeper in their office doing it if they're an operator? I'd love to hear some more details regarding the blocking and the day-to-day of using ZenLedger.
Sure.
And how it can be helpful for most of these people listening.
Sure. Yeah. So I guess I'll answer the kind of second question and go back to kind of the first one. So for the second question, we have a consumer side of our business, an enterprise side of our business, and then a government side. And so typically your question would kind of revolve more around the enterprise and the consumer side. And so for our consumers, we have three main cohorts. And so the first cohort will be more of like a do-it-yourself kind of self-service client. And so we have partnerships and integrations with TurboTax, with H&R Block, with TaxAct. And so while you're in one of these self-service platforms, when it says, have you ever, acquired, received, sold, exchanged virtual currency, you select yes. ZenLedger literally pops up right there. You click on ZenLedger, and then you just drag and drop our forms directly in with your W-2 or your K-1 or whatever else you have going on outside of crypto. So that'd be kind of the first cohort, is more of like self-service clients. The second one would be clients that have a tax professional. And so we have a tax professional suite that we built out that is free for tax professionals to use. Basically a really nice dashboard where you can link all of your clients' accounts, review the client's accounts, download their tax reports, print them off, help them reconcile, and really just manage that through an easy to use dashboard. And so that'd be kind of the second cohort of users that have a tax pro and want to link their tax pro to their ZenLedger account. Then the third cohort would be people that are looking for a tax pro. And so we have tax professionals and tax attorneys on staff that you can hire to have us handle all of your crypto and non-crypto account activity. And so depending on where you are on the spectrum, the flow may look a little bit different. But in general, the main steps would be ingestion. So you'd sign up for an account. You would import all of your exchange accounts, so like a Coinbase, an FTX, whatever your exchange of choice. You connect any of your centralized accounts. So if you have like a BlockFi or a Celsius, or like an interest-bearing account that you're depositing funds into and earning interest on, you'd want to connect that. And then you'd connect your wallet, so like your Bitcoin address, your Ethereum address, and so on and so forth. And so essentially what we do is we aggregate all of your activity across all of your centralized and your non-centralized activity into one cohesive place. And so then we can track that across your accounts. And so that's kind of the value add that we provide, is not only the tracking across accounts, but also some of the cost basis items that we went through earlier. And so we can see that this asset was bought for $5,000. You put $5,000 of dollars into ETH on Coinbase, you sent it into a MetaMask, and then you swap that ETH into an NFT. We can see the basis on Coinbase, the flow into your wallet, and then the transfer of that, or the swap or sale of that, into the NFT. And so we can look at all of the holdings periods for you. We can look at your accounting method, whether it's FIFO, LIFO, HIFO, or specific ID. We can look at your holdings period. We can look at any fees, whether they're blockchain fees or centralized fees incurred in these transactions, and either add that to the cost basis or subtract it from the proceeds depending on the transaction. And so the value add that we allow you to do is simply import all of your activity into one place and get comprehensive reports across your activity. And that may not seem super impactful until you really get into crypto and realize that people are using, our average user is using between 8 to 10 different wallets and 3 to 5 different exchanges. And so it's not as easy as it is like, hey, Coinbase sent me a tax report, I'm done. Because you likely bought items on Coinbase and then sent them off Coinbase to another exchange because this exchange supports this asset that this one doesn't. Or you send it into a wallet which allows you to basically interact with the world of DeFi and NFTs, and you can't really interact with that with a centralized exchange. And so because of the nature,
absolutely, that's the biggest problem. Yeah. No, 100%. And I think people can do their own QuickBooks. I do that my own QuickBooks for a lot of. I do QuickBooks for a lot of my clients, and a lot of people can do it somewhat, close. But then this is like a whole nother animal, especially with gray area guidance, all these different exchanges, linking wallets. As a tax professional, I see this evolving into another, area where tax professionals are going to be working with their clients, especially once they try and do it themselves. Come TurboTax, tax season time, they're like, you know what, I don't want to be bothered with this. I don't have time for this. Like, they spend a lot of time, and I feel like it sounds like an awesome product and something I'm going to definitely use for myself, ZenLedger, and I'm going to definitely look into doing this for my clients as well. talk to me a little bit briefly about the security of ZenLedger, because I can foresee this being a question. Because to me, this is a product. I've been looking at other products, and they don't seem to even fundamentally get to converting everything back to USD as thoroughly as ZenLedger seems to do, which is most of the battle. And then there's so much gray area after that. How does somebody get comfortable with either their own doing it themselves, or if I, the tax professional, is doing somebody's ZenLedger on their behalf? How do they get comfortable that somebody can't send something malicious to their public address, that I, as a tax professional, can't take their money, similar to how with QuickBooks, I can't press a button and withdraw money through QuickBooks and fund my own account?
Yeah, happy to review that. I mean, for us, security and data accuracy are number one, right? You can't have a 92% accurate tax report because it's not accurate, right? So you have to have a very high threshold and a very high accuracy on your reports, but also security of that data. And so what we do, similar to kind of a QuickBooks, right, is we don't have read-write access to any of your exchanges or wallets. And so when you connect your exchange, you use what's known as a read-only API. And so in non-like tech jargon, basically we get a copy of your transactions. You don't sync your account directly to ours. We can't log into it. We can't buy things, sell things, trade things, whatever. We basically say, Justin is importing his Coinbase account. And this is like a simplification. So if people are familiar with like APIs, then forgive me. But if you're not, then basically Justin would import his account. It would ping us that, hey, we are trying to import from X account. We would then ping Coinbase, for example, and say, hey, this user is requesting his account activity to be sent to us. And so we basically just get a copy of what happened in the account. That's all we need. We don't need you to connect your account directly. We don't need access. We don't need your password. We'll never ask you for your username or your login, your two-factor authentication or anything, right? We just use read-only API keys, which basically transfer the data that occurred in the account into us. And that's simply for the centralized activity from an API perspective. We also have CSV files, and those are typically provided by some of the centralized providers, which is basically a export of your activity into a file format. And then you just take that file format and import that. And so that doesn't have any of your PII or any information like that. And then the third one would be more of your on-chain wallet. And so with wallets, if you're familiar with crypto, you'll have seed phrases or security phrases that basically give you access to your wallets. And so we'll never ask you for any of that information. All you are doing is importing your public receiving address, basically where you are receiving funds into, which is public. And if you've ever used like a block explorer like Etherscan, you can just enter in your address into the platform and it'll say, this asset came in, that asset went out, whatever happened, right? And so we can pull that in. And so the way that we look at security and information security is, one, we don't actually ask for your first name or your last name. We don't ask for your social security number. We don't ask for your taxpayer identification number, your address, anything like that. All we need is what happened in your accounts. We'll aggregate the reports for you, and then you fill in that information outside of our platform. So then you'd go in and say, my name's Justin, my social security number is X, da-da-da-da-da. And so that's more on the security side. On the tax professional side, we've seen a lot of growth of the tax professional industry. When we first started the company in 2017, a lot of tax professionals, frankly, didn't understand crypto, and some just didn't want to, right? But the beautiful part about our software is that you don't have to. You don't have to understand fungible versus non-fungible or wallet versus exchange or anything, because you understand what an 8949 is. You understand what a Schedule 1 is. You understand what a Schedule C is. And because we aggregate and classify all that activity for you into these nice, neat reports at the end that you do understand, you're just taking those reports and then including that with the other client's activity. And so those are the ways I would kind of think about it, as far as not asking for any of your PII when you sign up or when you use the platform. Then everything that you're connecting is only read-only or public. It's never private, never usernames, never passwords or anything like that.
That's awesome. I know so many people listening to this are going to find that extremely helpful, and it's a great time to get started so early into 2022 with a technology like ZenLedger, whether you're using it on your own or with a tax professional, to make sure that you have an idea and can do some tax planning through the year to see where you're at, how much income you're incurring, how much capital gains, et cetera. And the security is very easy and for people to understand that this is secure. It's read only. And I think it's great that I appreciate you going into detail with that, because now people know what to look out for in a phishing activity if somebody was trying to imitate a ZenLedger. I know we've seen some of that with OpenSea lately, and it's scary what goes on. And people like you said, they got to read through that, blurb and make sure they sign it, and it's read only. So that's super helpful. I think a lot of people are going to get a lot of value out of that. Backtracking a little bit, back to high-level operations of ZenLedger. I know you mentioned that you work with some top investors at ZenLedger, Mark Cuban, Gary Vee. This is more from a curiosity perspective. How has it been, working with guys like that as other investors in this space? What's it like being in the room with them, making decisions about the company? Is it just like everyone's just an investor sitting there? Like nothing out of the usual? Is this something you get asked about a lot? And, just how has it been since they've joined you guys?
Yeah, no, I mean, we've been very fortunate enough to be able to have the opportunity to build a really great business in a really fast growing market. And so I think that naturally attracts a lot of investor attention and investor throughput. And so we've been fortunate enough to be able to really selectively aggregate a group of really impactful investors. And some of those investors are very fintech or financial technology involved. Some are very SaaS or software as a service involved. Some are very crypto specific, where they've been interacting and investing and operating in crypto for years. And some have kind of a unique combination of all three. And so Mark Cuban and Gary Vee, who are both investors in ZenLedger, kind of fall into that category of all of the above, right? They're very smart individuals. They've both done very successful in their careers. They both have a very passionate interest about crypto. And similar to us early on, they both were trying to figure out their taxes. And so we've been fortunate enough to be able to work with their communities. We'll have some really exciting things going on with VeeFriends moving forward. So keep an eye out for that if you're a VeeFriends investor or looking to get into your first NFT. But from like a day-to-day, there's not really much of a difference, right? Just because it's Mark Cuban or Gary Vee, it doesn't make them better or worse than any of our other investors. Their dollars don't become more impactful or less, right? Obviously, their connections are super valuable, and we want to lean into all the value that they can bring. But for us, we have, we've raised, a seed round, we raised a Series A, we're raising a Series B. And so we have really, really great investors across the board. And then so Pat and my job is to really lean into some of those investors and get maximum value out of them, and really ensure that their connections and resources and information helps us go from point A to point B. So it's obviously a massive value add. It's great for PR. It's great for publicity. I think people generally, agree that Mark and Gary are very smart individuals. People have watched Shark Tank for 15 years and seen him invest his own money. Same thing with Gary Vee through all of his own escapades, whether it's like flipping garage sales or in NFTs or in sports, or like just both very successful people. And so I think it gives you an extra sense of authority, right? To be like, hey, very, very, very smart, talented people understand what we're building, trust us to continue to build that, and are putting their money behind us to go from, where we are now to where we want to be. So we're very fortunate, to have them involved, and excited about bringing on some of our other investors as well.
That's awesome. That's really exciting. And like you said, it's definitely something that's great for PR, perks a lot of people's interest. Just in case there was any doubts beforehand of everything you were saying, that sounds amazing about the ZenLedger technology. That's just the final punch. It's like, yeah, this is the real stuff. Yeah, this is the future. I can just see Mark Cuban now on the next season of Shark Tank, like, oh yeah, I'm gonna have to come in and clean up all your crypto accounting. I got Dan over here with ZenLedger to fix it all up. I know he always says that about everyone's QuickBooks, which, being an accountant, I love that. I think it's so funny.
Oh yeah, I mean, you see like the value out of Shark Tank, right? Like it's like they always do this with Shark Tank. Before Shark Tank, we did 30,000 in revenue this year, and after Shark Tank, we did like through 30 billion or whatever crazy number, probably not billion, but like 3 million or whatever the number is, right? And so that value add is super impactful, and so people trust in what Mark and what Gary think and where they put their own money, and so it's very easy to work with them because they're invested in the company, and it's not just we're not paying for them to shill our product or do like an influencer approach. Like they generally believe in what we're building and the value that we're providing, and so we're very thankful for that. And I think for a lot of people, they want that They want to know that like really smart, qualified people are not only working here and building the business, but very smart and qualified people are giving the business capital to continue to scale. So, very, very fortunate to have both of them on board and have some pretty interesting things planned with both of them with some marketing things moving forward.
I'm looking forward to hearing it. I'm sure it wasn't a hard decision for them to invest in you with everything you're doing over at ZenLedger with the team. Seems like you guys, from my perspective, you guys are handling all of the needs out there that need to be addressed from a consumer and enterprise. And it's great what you're doing to try and, help provide clarity to government regulators as to how to best navigate this space, because ultimately you're helping everyone else out here, stay in the lanes and do the proper reporting and feel confident about, this is an exciting era. It would be very scary to go and build a website if you weren't sure you're going to get a notice in the mail from the IRS for building it. And now this is the next version of it with NFTs and crypto. And, it's really great what you're doing. I'm sure that ZenLedger will continue to help with that. I know Treasury likes to put out, when they put out proposed regs, they get comments from people. I'm looking forward to seeing, the regs and what you guys comment on it. It's all great stuff, and really do appreciate everything there that you shared with us. I think a lot of people are going to learn a lot from everything that you discussed, and hopefully next year, if not this year, everyone's crypto taxes will be nice and cleaned up with ZenLedger.
Yeah, I mean that's the plan, right? We view crypto as not a flash in the pan, but an industry that's going to continue to develop and grow over time. And so the infrastructure that we've built so far is great, but we need to continue to build and continue to make the product easier to use and better UI and better UX and more integrations. I think right now we support over 500 different exchanges, over 12,000 different tokens, over 60 different blockchains, over 50 different DeFi protocols and NFTs. But as we've seen, the beautiful part about crypto is that the pace of innovation never stops, right? And so next year there'll be a new thing that people are investing in, or a new way that they're using their crypto. And so we can't just kind of sit and be like, all right, well, we built something great and it'll be great. Like we have to continue to build each and every day to continue to build the software out. But yeah, we definitely see ourselves as kind of an integral part of the crypto community moving forward, and always happy to do podcasts or chats like this to let people know about us. And if you have questions, comments, we can link my social or our socials in the show notes. We have a customer support team standing by 12 hours a day, 7 days a week via email, phone, and chat. So if you're an accountant or if you're a consumer and you need help and you just have questions, and feel free to give us a chat or shoot us an email or call us. One thing we didn't touch on about like the onboarding is you can actually get started with us for free without any credit card or anything. So you can begin to import your accounts. We'll show you a high level overview of your short-term and long-term capital gains, your income, and then you're only paying to print off your tax reports. So if you're like, hey, that sounds good, I kind of want to try it out, but I don't want to like pay for it until I know, like try us out. We want you to be able to look through and see you owe X, Y, and Z. And then if you're like, oh, well, that looks right, then you can download and print off and pay for your actual tax report. So if you're on the fence and you want to talk to someone, reach out to us. And if you want to try us before buying us, you can do that as well.
Yeah, that's great. That's awesome. Yeah, we should touch on that more. Is there anything else with pricing that people should know about with ZenLedger, especially ahead of this 4/15 tax deadline, about a month out?
Sure. Yeah, our pricing has a few different tiers and a few different options. And so as anyone listening to this knows, your activity may not be the same as the other person listening to this, right? And so we don't want to have one price for everyone, because some people have 10 transactions and some people have 10 million. And so the computational ability to handle that, differs. So for us, our pricing starts at 0. And so if you have under 25 transactions in the tax year, you get your tax reports automatically for free. And so, we have a lot of our older citizens, maybe in their 60s, 70s, 80s, they're retired or like nearing retirement. They just want to put some money into crypto and kind of let it ride and see what's happening. And maybe they're only buying and selling every once in a while. They'll get free tax reports. And then we have plans that go up to $6,500 per tax year. And that's more of that like white glove service where you sit down one-on-one with a tax professional that help you with importing, reconciliation, and then filing of your crypto and non-crypto taxes. And so between those, there's multiple different tiers depending on the number of transactions you have and the types of transactions. And so typically anything DeFi, staking, NFTs, options, derivatives, anything a little bit more complex, and I just bought Bitcoin and sold it for dollars, goes up in our 149 and 399 tiers. And so the good thing for investors that may be like, well, that's a lot of options. Like, where do I start? You can actually import those transactions for free, as we mentioned, and our system will automatically highlight the plan that you need. And so if you import 5 transactions, it'll just kind of walk you through to getting your tax reports. If you import 2,500, it'll fit you into the tier that you fall into and say, hey, because of these metrics, you have X amount of transactions and you have DeFi and staking, you are now in the 149 tier. And so you don't have to like guess or choose. You can as well. And so if you pick a $49 plan and you need the $149 plan and you exceed the number of transactions, you can simply just upgrade and pay the difference. And so we allow you to kind of move plans, change plans, and that's really flexible as you move through your own crypto journey. And so some of our investors were really, really, really active in 2017. So it was like a bull market and people were buying and selling. And then 18 was more of like a bear market. So people weren't buying and trading as much. And so we don't want to charge you the same as, the 10,000 transactions as, in a year that you had 1,000. And so your pricing with us can change throughout the years as you get more and more into crypto and start to buy and sell and trade more and more. So our pricing can be found, and we can link in show notes or whatever, but our pricing is just zenledger.io. And then we have a pricing tab that walks you through the tiers. And like I said, the software will kind of, once you import your information, will automate you to which plan that you need.
Awesome. Yeah, we'll definitely get the social and the links all in the show notes 100%. Was there anything else that I think we covered everything that I wanted to discuss with you and greatly appreciate? Was there anything else that we didn't get to wrap up or you want to talk about?
Not really. I mean, I think we touched on a lot of different items today. We kind of touched on guidance. We touched on how crypto is taxed. We touched on how ZenLedger and our software can help. So, I'm available on social media, on Twitter, pretty active. Our corporate account's pretty active on Twitter. We have a newsletter that kind of highlights different things throughout the week for you and in crypto portfolio tracking. So in addition to your taxes, you can use our platform to kind of see, am I up, am I down? Where are my assets? How much are they? What should I be doing with them? And so, we'll link in the show notes, but happy to connect with anyone, if you have questions, comments, need help, our team's standing by to help you.
Awesome. Thanks, Dan. Really appreciate it. And as a thank you for coming on the MacTax show and podcast, if you're ever in New York next year, I'd love to take you out to the Flyfish restaurant. I know we were talking before the show. Not sure if you picked up a token since the last time we spoke, but happy to take you and a couple of guests to the Flyfish restaurant on me, as a courtesy and a thank you for doing the show today.
Appreciate that. Yeah, we'll love to connect. I should be in New York sometime soon. We'll be down in Miami for Bitcoin 2022 in like a few weeks. And then as COVID hopefully starts to, wind down and we get past it, hopefully there'll be more and more crypto events and conferences and meetups and things like that. So excited to be able to get back out after a few years and meet back with, the people that have gone into crypto in, 20, 21, 22 in the middle, kind of this craziness. So if you're at a conference, we're generally at most of the conferences in crypto. So if you see me walking around or whatever, say hi, happy to connect and happy to help.
Awesome. Yeah. And I'll see you at VCon in 2 months.
Absolutely. Well, Justin, it's a pleasure and I appreciate you having us on.
Awesome. Thank you so much.
Absolutely.